Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar yields, precious metals and commodities ETFs that I follow. I'll interject my financial opinions as we go through it together. And if you need help with anything, check out finding-value.com. That's where I dive deeper into all of these subjects and topics, looking for potential investment opportunities, sharing them with everyone in the community. I also do question and answer sessions on the weekend for whatever you guys ask. I think this next weekend we can talk about TradingView and how to navigate through it. I know this was something that a lot of people wanted me to do, and we can go through it and navigate how I do things and the functions that TradingView has. We do have a coupon code special is the coupon code, 50% off the first month only on the monthly membership to try it out. Or you can sign up for the yearly membership, get a much larger discount, and get that discount in future signups as well. So let's dive in. Let's take a look, see what's going on, starting with the dollar. And the dollar still looks pretty strong. We don't have a ton of selling pressure up here. To me, it looks like we are going through some sort of consolidation channel. Maybe it's a squeezing that we get. Hard to say, but it is, to me, looking like it is a consolidation sideways. And then eventually we could see the dollar continue higher. The reason I say higher is because we are above a lot of support. So even if we do sell off, even if it comes on back like this, we are still above support and has to break through all those support levels. So that's what the dollar is. Now, that weak or that strength in the dollar is generally driven by yield strength, where yields are going up. So the 2-year yield in the shorter term, it's doing the same thing as the dollar on the 2-year. It's just been tracking sideways. And the way that I view this is that we've got upside momentum, consolidation, and then a potential break higher. Now, obviously, if we get data that goes against what I just said, let's say we get a big bearish engulfing candlestick, I will change my mind and say that we were going lower. So remember, these short-term candlesticks and movements that I am looking at are only good with a probability and for the very short term. The 10-year yield cruising higher, looking good to continue higher. We've broken out of the larger pattern here to the upside. And right now, we've created a higher high. So what you see is you have a higher low or lower high. Your low comes in as a lower low. And then this movement lower, we'll call it a big flag pattern there, is broken when we broke out of that high there. This guy right here. So we are moving higher. The 30 year is doing the same thing. We are ripping on the long end of the curve, 10 and 30, and we are moving on up. It looks really strong to continue higher, and we've broken out of patterns. We've broken out of resistance. Everything looks pretty good. TYX, TNX ratio, we are inverted. And this is, I posted, or I chart it this way. We've come on down, we've inverted, we've stayed inverted the entire time. We've got TLT bond pricing selling off about 0.83%. And again, this looks pretty weak. So this is bond prices. The other things we were looking at were yields. So as yields go up, bond prices go down. We've got the 2 and 10 year, which is continuing to uninvert. Is this a problem? It very well could be. It is coming on back. The yield curve is normalizing. When the yield curve normalizes, when it gets below a 1-to-1 relationship, 1-to-1 is when the 2-year falls below the 10-year. The 10-year is at 4.6. The 2-year is at 4.33. It has fallen below the 10-year, and that's when generally you see a slowdown in the market. Now, how big is this slowdown? What does it look like? I don't know, and I don't think anyone else really knows. We're all trying to figure it out. But this is generally when you get the slowdown. And if you see yields drop where people are running into bonds, that's definitely a sign that a slowdown is here and or is just starting. Gold down $23 an ounce. I'm quite surprised to see gold down $23 an ounce when yields didn't really go anywhere and the dollar didn't go anywhere. The long end of the curve did come up, and we've seen gold perform well even when yields go up on the long end. But it was down $23 today, roughly speaking. We are still above support here, and we got a little bit stronger selling pressure day today. Silver down 1.4%, another stronger selling pressure day. You can kind of see this rollover here, and we could pull back in the short term. Longer term, it still looks good to me for a move higher. Breakout here, breakout of this other trend line, and then these are big flag patterns and squeeze ups that we're getting in the red candlesticks. Platinum, they rolled over futures contracts, so when they do this, it kind of messes with the data. So if I were to type in platinum and look at this, we were down 1.22. We were breaking out of this pattern here, but we came back within it. So that's kind of what we're seeing there. We're back within the pattern, at least for this chart here, down 1.4%. Palladium down 1%, right on support. Still holding steady. Now, I do think this could potentially go lower. That is definitely the case. We've been knocking on this support level. And we do have a little bit of a squeeze. I can kind of see a little bit of a squeeze here to some degree right there. So we'll see what happens. We're right at support. But palladium generally moves opposite from the other metals, generally speaking. GDX down 0.58%. This still has downside momentum, hasn't reversed yet. GDXJ is the same thing. There's your projected move down to $40-ish. And then silver's got a very similar setup. It came on down, and we got an inverted flag pattern, which generally ends up going lower. So I do think there could be a leg lower in gold and silver mining stocks. XAU to gold is still at support, and we're sitting right on support at this time for gold and silver mining companies divided by gold. Crude oil, we're up 0.83%. Not a bad day. It's not a great day, not a bad day. It's up. It doesn't look bad. We squeezed up into this corner here, broke out, squeezed up again, broke out, and kind of flagging out. So this still very well could go higher. I think that's what it's positioned to do at this time, is to go higher until I see evidence otherwise. And the reason I think it will go up is because we're breaking patterns to the upside. That's my upward bias. Longer term, we're still squeezing in the corner of a big pattern that we entered from the top side. We're in that dead period. We're also sitting on top of this structure here. We're sitting on top of that structure. So that's generally a bullish formation on a longer term view. TTF gas up 5%. Looking bullish in an uptrend. There's your uptrend line. So that looks good. Nat gas, that also has contracts rolling over. Sometimes you get these weird kind of blowout moves, either up or down because of these contract rollovers. XOP, yeah, you know me, still looking bearish to me. Kind of interesting, an interesting mix here. We got a shoulder, a head, and a shoulder, which is a bullish formation to go higher. In fact, this is a very big shoulder, head, shoulder, and it could go way higher. We look over on the right hand, we have this squeeze kind of coming up. We get kind of this breakout, not much selling pressure. We took another run at it where we tried to break out, and we did to some extent. We broke out of this downtrend line upward. And then we just had this past couple of weeks, 4 or 5 weeks, just getting selling pressure 1, 2, 3, 4, and then we're putting in the fifth week here. But 1, 2, 3, 4, the last 4 weeks before this one, pretty strong selling pressure. Now, is this just a pullback that went a little bit more than the support? Or is there a lot more left in this? I don't see reversal candlesticks necessarily, and this very well could be, this, whoa, the stair-stepping pattern where we could head lower. Very well could be. So it's a bearish formation at this exact moment. Crude oil doesn't look that bad, but XOP, it still could head lower. It's on the table. OIH, which is the energy service companies, it still has a bearish setup. You can think of these as kind of flag patterns here, where we could head a little bit lower here in the short term. Newcastle coal futures down slightly. We're just waiting for this to put in a right-hand shoulder, it looks like to me. So shoulder, head, shoulder. Potentially. And the bottom here of this was 129. We're at 126, so we'll see if we get some support here. If we don't, and it continues to sell off, we've got strong support at 105, which we very well could hit that. Looking at it like this, I mean, it looks a little bit weak. We've got Sprott Physical Uranium Trust up 2%. It does have a bullish engulfing candlestick, which means we could go higher. Another thing to look at is a lot of the times we get bottoms very close to where we bottomed here in turn. So it looks like to me that we could go higher here in the short term for the Sprott Physical Uranium Trust and give it a shot to the upside here. And this is a big bull flag. Uranium futures pricing continuing to sell off, and I do think that we've got the possibility to get down to $64. We are heading on back there. URA flat. We are trying to make a turn here. The bulls and the bears are in equilibrium, trading sideways. We entered this from the top side down, so there's still downside momentum. And we're trying to turn that around here. URNM doing the same thing. URNM doesn't look too bad. We've got a bullish engulfing today. That does look like it wants to go higher. We'll see if we get follow through. And we've got a little bit of kind of a pattern there squeezing up a little bit. So that looks bullish, at least a little bit. And then URNJ doing something very similar to URNJ or URNM. It's not as bullish, but it's trying to turn. It's trying to turn its way on up, and we'll see if it can. Copper flat, right on support. There's that trend line that I drew, support, and we're squeezing into a corner. COPX down about 0.6%. Still looks a little bit bearish. Whenever you fall real quick like this, you've got momentum behind it. And then you kind of come up, and these are bearish formations. The formations that come up and faced angled upward, those are bearish. The ones that are angled downward, like this one, that's a bullish formation, but it changed right at elections. It's like elections came through and everything went bearish in commodities. Iron ore holding steady, working sideways, still looking all right. Aluminum down 1.2%, still underneath resistance and in this pattern. Nickel down 0.34%. We do have some downward momentum that is being generated here. So that is looking a little bit more bearish in the short term. And I know some people, they like to do big long-term charts, like maybe they throw this in there. I'd say it's bearish, not bullish. Whichever way I draw this, most of these are bearish formations. Mu down slightly. We're back within the pattern. It looks real ugly with this big gap that we got on this dividend here. But not a ton of selling or buying pressure, I should say. So the momentum is still downward. Emerging markets down slightly, and again, strong dollar, strong yields. Emerging markets is going to continue to bounce around sideways. KRE down 1.24%, right at support. We do have some good downside pressure here, but we're at support, so we'll see if it holds. TAN down 1.2, strong dollar, strong yields. None of these are going to like this. Lithium is not going to like it. It's pulling on back. Not too bad. REMX doesn't like it. It's pulling on back. Strong dollar, strong yields is what I'm referring to. Baltic Dry Index chopping sideways, but momentum is still down. Patience. XHB looking like garbage now. So we've got this move up into a rising wedge. And then we've broken out of the rising wedge to the downside. And this does look like a inverted flag pattern where we could head lower. So it still looks weak. Russell 2000 looking pretty weak too, selling off 1.5%, and this could also be a flag pattern that we've entered going down. But again, it might not be. We have to see this thing break on up if it's not. S&P 500 is looking pretty weak, down 1.11. I'm surprised at the rising wedges, the breakouts, and then we continue higher. This is like a plunge protection team thing going on, where this one doesn't have, there's some selling pressure, but the buying pressure, it's not like people are just diving into this thing. They've got small little candlesticks all over the place in all these sections here. And then what you start to see is the big boy reds. The big reds start to come out on these pullbacks all through here. That's generally distribution. And then the NASDAQ selling off quite hard here. It struggled to come back up, and we sold off today, but there was some buyers towards the end of the day to put the wick at the bottom. To me, this looks bearish, but somehow this thing just continues. Higher, 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 and higher. SMCI down 5%. It's gonna take some time for this to base out. We've got NVIDIA down 2%. And again, guys, these are from historic runs. I mean, look at the size of this move here. Commodity bull market usually gets sideways action out of tech. Between one commodity bull market and whatever comes up next, you get your tech S&P 500 bull market. This is your bull market. You want to be buying in the beginning of this bull market over here or over here. And then you hold on to it. It takes some time to develop, break, and run. Everyone who's entering way up here, I think you're more towards the end of this bull market, and the beginning of it was here. And you can see this amongst all tech companies. It's not just NVIDIA. So I'm looking at this for a potential turning top. I don't know if we can say that has occurred yet, but that's just what I'm looking for. And then when we get it, and interest rates could be a driver of that, the 10-year yield going up, you'll see a rotation of money into other stuff. Bitcoin selling off 1.1%, but we're still above support. It still looks okay. And it still could very well go higher if the buyers step in. Ethereum also at support. It looks okay. We do have a lot of this selling pressure coming in and not a ton of buying pressure. That does look bearish, like it wants to try to break through that support area. MicroStrategy not looking all that great either. What I look at here, so here's 2002. This is the big selling pressure move. I think it almost went into bankruptcy or something. This was your bull market in commodities. So you can put kind of this across here. Your bull market in commodities was all through here. Then we started to go into a tech boom. MicroStrategy may not be a great company back here. Probably didn't have a lot of earnings. But then it became a Bitcoin proxy somewhere in here, I'm guessing. and then you're getting this volatility that follows Bitcoin. But and then the VIX was shooting up today. It was up 8.29%. We are still above support resistance in here. He broke out, came back and did a retest, and we very well could break higher. We could see markets sell off, and things align for that to occur. We've got the 2 and 10-year yield uninverting or normalizing, however you want to call it. And some of these setups could easily turn into bearish setups. But that's what I've got for today, guys. Give me a thumb up for the content, subscribe to the channel, subscribe to the website. We've got that special discount coupon code if you'd like to use it. We've got a Sunday question and answer session coming up at 5 p.m. Mountain Time. And we'll see you there, guys. See ya.